If you're familiar with the stock markets, then I'm sure you are knowledgeable of the bid-ask. To help illustrate this concept, let's look at an example that is unrelated to the currency markets. Let's say you have an old car that you want to sell. You figure the easiest way to sell your car is to go to a used car dealer and have the dealer buy the car from you. The used car dealer acts as a market maker where, let's say, the dealer pays you $5,000 for your car, knowing that he could sell your car to a buyer who would pay $6,000 for the car. In exchange for selling your car, the dealer will collect the $1,000 spread. The same goes for the potential buyer of this used car. The buyer of the car will have to pay $6,000, which is above the original $5,000 price the car was sold to the dealer for. So with that being said, let's go ahead and look at a currency pair quote with a bid and an ask price. And as you can see, I've included 3 different screenshots which all show the same information, but I just wanted to convey how this information can be shown differently depending on the broker. So taking the dollar-yen pair, which as we can see here, the bid price is 120.292 and the ask is 120.32. So if you buy the currency pair, the ask price indicates the amount of quoted currency that you need to pay to buy 1 unit of the base currency, meaning 120.32 Japanese yen will come out to $1 US. Remember that because the US dollar is on the left, that is the base currency, while Japanese yen is the quoted currency because that is the currency that's on the right of the currency pair. So inversely, if you were to then sell the currency pair or go short, the bid price indicates how much of the quoted currency will be obtained when selling 1 unit of the base currency. Essentially, the bid is the price at which the market is prepared to buy a currency pair, and the ask price is the price at which the market is ready to sell a currency pair. Also, as something to be aware of, not all websites provide bid-ask quotes, as for example, if you were to look up a currency quote on Google Finance or Yahoo Finance, they typically only show one price, which is generally an average of the bid-ask. But most brokers certainly will show both the bid and ask prices. That is important information to have. So another term you will frequently come across is the spread, which refers to the difference between the bid-ask. So in this case, given the bid-ask for the dollar-yen pair is 120.292 / 120.32, the difference between these two values is 28, whereby the spread is equal to 28 pips. One of the benefits of currency trading is you do not have to pay trading commissions, unlike equity accounts where you have to pay a fee for each trade. Now, if you're wondering how your Forex broker earns a profit, it all comes back to the spread. Brokers capture the spread between the bid and ask prices. Therefore, the thinner the spread, the cheaper it is for you to trade and the less profits for the broker, while the wider the spread, the more expensive it is for you to trade and the more profits the broker will make. So as I previously mentioned, given the bid-ask for the dollar-yen pair is 120.292 / 120.32, the broker profits on the difference of these 28 pips. So let's go ahead and look at a live example here. So looking at the dollar-yen pair, let's say you're bullish, meaning you anticipate the pair will appreciate and you intend to buy the base currency, go long the base currency. So you're going long US dollar while you have a negative view on the yen. So you're buying US dollar, long dollar, and short yen. So to go ahead and do that, here is our trading panel right up top. And again, if you don't have your trading view free paper trading account set up, definitely go ahead and backtrack to that lesson where I covered how to do so. If you want to buy this pair, we just simply hit buy. We'll notice this is the ask price, the price that we'll have to pay. Well, if we went ahead and bought this and wanted to sell this pair, here is the bid price at which we will be able to sell this pair at. As you can see, the spread is relatively narrow, about 4 pips, and you'll see this kind of will fluctuate. At times, when there are many traders active, the spread will be more narrow. So typically, when the U.S. markets, the London markets overlap, there's a lot of people, who are trading, heavy volume, good liquidity. So you will see a narrow spread, but at times, such as during the night, where there are fewer trades taking place, lower volume, you may see the spread widen a little bit because there's less activity. So again, going ahead to buy, you will pay the ask price, and if we were to sell, you would sell and receive the bid price.